Today on Finance at 5, markets continue to fall. The S&P TSX fell 1.9%, making a week loss of 6.84%. Now, while that sounds like a big drop, it could have fallen further, but during trading hours today, the S&P TSX actually halted all trades as they had issues placing orders. The S&P 500 continues to tumble, falling 4.42% today. That means over the week, it's fallen 11.69%, and on the month, 9%. It's a insane drop, and we don't know when it will stop. Maybe tomorrow it'll turn up a bit, but this is the 4 days in a row that the stock market has fallen. The Dow Jones also fell a staggering 4.42%, making it a week loss of 11.82%. The Nasdaq fell 4.61% and now has the highest weekly loss of 12.15%. The Reds continue, with the FTSE dropping 3.5% today, making a total week loss of just over 8%. The Nikkei also fell 2%, making a week loss of 7.5%. Oil continues to tumble, falling 3.8% today, making almost a 10% loss for the week. Gold, while it has been doing well, fell slightly today, and over the week it's fallen from its high earlier this week, making a 2% loss. With a lot that's going on in the stock markets, a lot of people have been fleeing to safer assets like gold or government treasuries. U.S. Treasuries yields continue to fall, with the 10-year falling to 1.27%, hitting historical lows. You can just take a look at the yield curve, and it has inverted again. It went out of inverting last year a bit, but has continued that path, signaling that there could possibly be a recession in the future. Some analysts even expect that the 10-year yield will fall to 1% or even lower. There's already pressure on the US Fed to lower rates, and as there's 90% priced in that they'll lower rates in April. Moving on to currencies, the Canadian dollar had a really rough day, falling almost versus every currency. It's fallen below that 75-cent threshold versus the US dollar down to 74.74. The British pound also had a rough day, not falling quite as far as the Canadian dollar, but still pretty far. On the upside, the euro had a strong day, as well as the Australian dollar and the Japanese yen. Looking at the US economy, their quarterly GDP revision has come in, and it has stayed the same at 2.1%, but there is some changes going on. Firstly, there was an upwardly revision in trade and inventories, and a downward revision in consumer spending. It dropped to a rise of 1.7%, previously from 1.8%, as well as a revision for non-residential fixed investments, which fell 2.3%, which is the third straight quarter it's fallen. Another suggestive consumer sentiment issue is that the Bloomberg Index of Consumer Comfort decreased 2.1 points down to 63.5. So there's a little bit of strain on consumer spending and sentiment in the US, and with the coronavirus going on, this could have some impacts going forward. But there's also some other good news. For example, 5.2% increase in the number of buying house contracts for January, which is the most in 9 years. And over the year, it's been up 5.7%. Also, core capital goods orders jumped 1.1% in January, off the back of a December of negative 0.5%. It was also expected that it would only be 0.1% increase. So overall, there's some good stuff going on in the U.S. economy as usual, but there are some concerns to watch going forward. Now, you might have thought that the Brexit news was over now that a deal had been made, but you could be farther from the truth. There's still a lot of issues going on between Prime Minister Boris Johnson and the EU administration. Right now, they're trying to work on figuring out what trade deal to do, but there's a lot of issues with that. And Boris Johnson's now threatened to walk away with a deal with the EU if they can't get a Canada-like deal. For example, Canada has a 98% goods duty-free going towards Europe. Now, he said that he's given Europe 4 months, and if it doesn't happen within that time or certain progress has been made, he'll walk away completely. Now, I'm not exactly sure how much he'll hold to this, but the way he was able to finally get Brexit to go through, he might be able to pull some weight with that. So kind of some issues that Europe is kind of wanting the UK to follow along with their regulations in everything they do, which really doesn't make sense considering that their plan is to leave the UK. It kind of sounds like EU still wants to control what they do, their employee regulations, their what they do on immigration, as well as climate change initiatives. Coronavirus continues to be an issue in the markets and in general around the world, with total cases reaching 82,758. Total deaths have reached 2,817, with a recovery amount of 33,350. Now, what's really concerning about this new news is that South Korea has added a total cases of 505. To put this in perspective, that's a huge amount considering their total cases were only at right now 1,766. As well as the US has its first case with unknown origin. So they don't know where this person got it. So there is concern that it's actually traveling through the United States and that's already there. As you can see in South Korea, it kind of feels like a lot of that same thing has happened with these numbers skyrocketing out of nowhere, and they're not really sure what to do. There's also some good news. Starbucks stores are now opening in China as they fear that the fear of the virus has kind of gone away and that it's not continuing to increase dramatically and that they've reached the peak in China. Though, on the bad side, looking at the US, Goldman Sachs has actually announced that they expect no earnings growth in 2020 for US companies, as well as JP Morgan also lowering their earnings, generally to do with a lot of the issues surrounding the virus, stuff closing down in China, supplies stopped, production stopped, and things like that. It's probably been a while since you've heard about the new NAFTA deal, also known as USMCA. But this article kind of makes an interesting point that car production in Canada will likely fall due to a report by the government saying that with the new rules in place, certain things will change. For example, what the big thing that changed is now 75% of it has to be from North America, up from 62.5%. Now, under what's going on in Canada right now, 19.1% of the Canadian automobiles that are exported to the United States won't qualify for that, as well as 9.6 for Mexico. So this could have a significant impact. They're expected that exports will decline 1.5 billion and imports from the US will decrease 1.2 billion. This kind of expect that there'll be more coming in from Japan, South Korea, and Germany, and that those will play a bigger role in the markets. I'm a little skeptical. I think maybe they might play a little bit, but I think over time that it'll kind of even out and that they'll find ways around this. Moving on to company news, you might have guessed it, but we'll be talking a little bit more about Canadian bank earnings. TD Bank, one of Canada's largest banks, reported their earnings and they had an earnings miss. Their earnings per share was $1.61. It was higher than last year's $1.27. On an adjusted basis, they achieved $1.66, up from $1.57 the previous year, but it missed analysts' expectations of $1.69. Though they are raising their dividend pretty high, it's 79 cents now, up from 74 cents previously. The reason for this quarter not achieving the results they'd like is issues with their US banking. US lending margins fell. The US retail earnings fell 7.6%, and Ameritrade earnings fell 35%. So they're having a little issues more in the US, but overall it's a decent quarter with a pretty sizable increase in their dividends. National Bank, Canada's sixth largest bank, also reported their earnings. They had a strong quarter, beating expectations, and they reported profit of $610 million in the last quarter. They had an earnings per share of $1.67, up from $1.50. On an adjusted basis, they achieved earnings per share of $1.70, up from $1.50. And they beat analysts' expectations of $1.67. Overall, this has been a pretty strong quarter for the Canadian banking industry. As you can see, most of the banks were able to achieve growth and a decent amount actually performing better than the markets expected. Things just can't seem to get any better for Canada's energy industry, with Husky's stock falling 11.7% in the morning. This is off the back of their quarterly report, where they had a $2.3 billion loss, mainly due to asset impairments and non-cash impairments and other charges. This is kind of similar to some of the other companies in the industry, like Suncor did a $3.3 billion charge, as well as a few other companies. Overall, though, the revenue is down 4 point to 4.79 billion from 4.99 billion. This is kind of expected. There has been some issues there with some shutdowns and things like that. So their free FFO was 47 cents, and then which is down from 58 cents. Maple Leaf Foods also reported their quarterly earnings having mixed results. Their sales reached 1 billion, up from 895 million the previous year, but their adjusted earnings per share didn't do too well at 12 cents, down from 29 cents a year earlier. Analysts expected it to be at 17 cents. On the upside, though, they are increasing their dividend to 16% share per share versus 14.5 cents per share previously. Overall, it's kind of an interesting look. They did achieve sales growth, which is good, but are having more issues on that cost section.